Michael, if you could tell us what is in store for the local currency. I mean, we've weakened slightly today. Is it on the back of the fact that we've got a lot of economic data? I mean, the US closed for a public holiday today. We had China increasing its bank's reserve requirements as well. What does this spell for the rand?
Yeah, look, I think Friday's announcement about the reserve increase in China doesn't bode well for emerging markets in general, or any emerging markets such as South Africa that exports a lot of its produce to China, because any monetary tightening out of China could reduce demand from that country. But, you know, we've seen the rand actually weakening across the board. It's been not just against the dollar, against a lot of emerging market peers. It was the worst performing currency, in fact, last week. And I think that just, you know, reiterates the fact that a lot of participants are now waiting with bated breath to see what the MPC delivers on this Thursday. Not only the statement, at least not only the decision, but also the statement. We, together with a lot of other houses, are expecting interest rates to remain on hold. But we'll also be looking to see whether or not the Reserve Bank is open to the idea of more cuts further down the line. Because in our opinion, another interest rate cut would actually have probably been supportive of the rand. We've seen strong equity flows into our JSE over the past couple of months, and another interest rate cut would enhance our growth recovery and thus be conducive to those equity inflows. So I think the fact that the Reserve Bank is now probably unlikely to cut interest rates this week, coupled with our belief that the Reserve Bank has been accumulating more reserves, is probably the reason why this rand has actually underperformed everyone else over the past week.
Michael, we've also got PMI set to be released today. I mean, we had manufacturing out last week. Looking at the PMI number for November, it came in at 52.9. What is your expectation on the manufacturing front?
Yeah, we expect a further slight recovery, but the manufacturing sector at some point in time is going to start bearing the brunt of the strong rand environment. So we're not expecting the manufacturing sector to shoot the lights out in the medium term, partly because of the rand and partly because global demand, it's picking up, but again, it's not robust. So we expect a bit of an improvement, and any improvement together with the kind of data flow that we've seen in the past few weeks is going to support our view that the Reserve Bank should probably keep interest rates on hold this week. We saw some encouraging car sales figures last week, credit demand, all of those things are starting to pick up slowly but surely, and I think that's why the Reserve Bank is probably going to pause this week.
Okay, Michael, just give us your rand forecast for the rest of the week, given the fact that it's very heavy on the data front in South Africa.
Well, from a technical perspective, you know, 695 is quite pivotal. If we breach that to the top side, we could test 704, 705 area. If we don't breach that 695, then we're probably going to return back to that 687, 694 range. So those are the kind of parameters that we've got over the coming days. As you mentioned earlier, it's thin trading volumes because of the US public holiday. But countering that is, of course, the fact that a lot of local participants have come back to the market, and we wouldn't be surprised if importers are probably just jumping on the bandwagon here and saying, perhaps the rand could weaken a bit more, let me cover forward, and that could push the rand as well